Yo, what is good, family? Hope y'all are having an amazing day. Today on a Sunday, we're gonna break down a setup we had also on Eurusd this last Thursday at the Frankfurt Open. Again, same pair, same time, same trading session, right? Nothing changes. Basically, we will be breaking down this exact same structure. I have to say, all right, the week this Frankfurt Open with Eurusd has been pretty fire. I mean, super solid. Not every single week is like this. We had only one loss out of 5 trading days. So yeah, pretty solid, pretty good so far. And let's break down this exact same setup. Next week, if we have more invalidations, we will break them down also right here in this session. All right, but for now, we will break down what we had, in this case, another win. Basically, as always, vertical line at 8 a.m. exactly here, and let's break it down. So right before this consolidation, this pullback, we just had a big bullish impulse. Basically high, higher low, higher high, higher low, higher high. Pretty simple, right? Then we had the market breaking the structure. We had low, lower high, lower low, BOS, lower low. Therefore, the structure now is like this: lower low, lower high, lower low. All right, market did this. So this lower high takes the previous lower high and creates another low. So now the structure is this one. All right, this is super important. A lot of times you will have the market doing this type of stuff. Creates a bullish BOS, which eventually is just a liquidity grab, a fake out for people to get into longs, and then hitting the invalidation from those buyers to keep going lower. So when you see this, now your structure is high, low, lower high, lower low. This is super important, right? This is just tenets of market structure, super key. Then we have high, low, lower high, lower low, lower high, and lower low. That's perfect, right? So bearish structure explained. Now the market, what it does is another bullish BOS. Same thing as here, market does another bullish BOS. The bullish BOS extends itself until this point. If we look to the right, we have this level exactly at 762. This level is 762 also. So price is basically doing high, low, lower high, lower low. Let's break this down, because when we have a equal high, all right, this is still one impulse, 2 impulses to the downside, although they are equals. We broke this down in previous videos, all right? But when we have the level on the right equal or lower, all right, we can have also this. This is more obvious, right? This is 1 impulse, 2 impulses. But this is still 1 impulse, 2 impulses. The different thing will be if the market does this. Obviously, if it goes up higher, we cannot say first impulse, second impulse. That's not logic. But if they are different, the right being lower than the left one, or they are equal, exactly equal, this is correct for a bearish structure and a bearish buildup. So this is correct to understand it as a high, low, lower high, lower low. So let's put the replay mode exactly at the open of the session, because we still have more stuff to talk about. But this is literally at the open of the session, of the Frankfurt session. Okay, at this point we have to say, all right, what is my last high? Is this one. All right, this high is a higher high, therefore we should be looking for a bullish rule of the third impulse. Now, for a bullish rule of the third, we have to see if we are on a structure with less than 3 impulses, pretty much with 2 impulses including a second pullback, which in this case is not. All right, in this case it's not. We have only 1 impulse to the upside, first retracement. We are on the way to the second impulse, so there is no bullish rule of the third impulse that is valid right here. Now the low, this is not a significant low, because this is not a lower low and it's not a higher low. All right, it's just a point of the structure that is on the build-up. If this was a higher low, we should have a higher high, which we don't have. For this to be a lower low, we need a bearish buildup, like a bearish BOS, which we don't have right here. All right, this is just a buildup of 1, 2, 3 bullish candles. So there is nothing. All right, let's remove this. The next low is this. Now this is a lower low. All right, a lower low means a bearish rule of the third. For us to be on a bearish rule of the third means that we need 2 impulses and a second pullback to the downside. And right here, because this bullish impulse took this lower high, and this lower high means that if it goes lower, we only have 1 impulse. We will be making the second impulse. Therefore, we cannot sell straight at this low. This is a quite more advanced structure, I have to say. All right, but anyways, let's keep breaking it down. All the new people, I'm sorry. All right, this is what happened on Thursday. It's not in my control. But the advanced ones are gonna enjoy this one. So, next candle. Candle that opens the session. What are we doing at this point? We just update the structure. Not what happened, but what is happening right now. We have high, low, lower high, lower low. Now our levels changed a little bit. Because now our high is a lower high. Well, it is an equal high, but it's valid for what? For a break of a structure to the upside. This is valid. Fantastic. So now we have a valid long. Now, let's talk about the shorts. This low is nothing, all right? We are still on the build-up of this being a lower low or a higher low. So there is nothing right here. Still, we will need a bullish candle that confirms that this is the finish of the second impulse. Therefore, we can go for a bearish rule of the third. So for now, there is nothing. And this is the same level that we said we cannot sell at that point. So for now, we only have the bullish break off structure. Next candle keeps going lower. So we're still the same. Bullish BOS, nothing for shorts. Next candle creates a low. Now this is interesting. This is interesting because it's right here is happening the same thing that happened right here. What we just explained, all right? Bearish BOS, bullish BOS. Eventually, this is a fake out to keep going lower. But here, what is happening is fake out to keep going lower, lower high, lower low. And market then took everything. This bullish movement is this. Market took everything, respected the highest high to now keep going lower. What do we have here? Now we have high, low, lower high, lower low. The objective was to take liquidity, tap into supply to keep going lower. Interesting, isn't it? Now we keep deciphering the puzzle. We update the highs and the lows. The high is the same one, right? Bullish internal break off structure. This level is now our lower low. This low was 684. This is 684. So the closing point of this candle is the same as the low of this candle, which is pretty interesting. But we still need one bullish candle for us to sell on the rule of the third impulse. So just as a summary, we have this. All right, this is now how the structure is. Next candle goes up. Now we have the bearish rule of the third impulse valid. This is valid already because we have first impulse, first pullback, second impulse, second pullback, confirmed by this bullish candle. It's at this point where we set up the bearish rule of the third impulse with invalidation at the highest high, exit at the 1-to-1. Easy peasy, right? You just follow up what price does during the session. Now you have your bullish BOS as a buy stop, bearish rule of the third as a sell stop. Next candle goes up. Next candle activates the entry. Fantastic. Now the bullish idea is active. We cancel automatically the bearish idea. We stick to the long. All right, that's our setup. We have the exit, we have the stop, we let it run, and eventually, you know, the market hit the exit. Beautiful setup. This is the importance of following up the market. The session opened at 8. The idea was given at 8:25. So you just have to be 25 minutes in front of the charts to follow it up. And then after the idea is executed, you just make sure you close the short, the pending order, and just go with your day. You can go to the gym, you can walk a dog, you can make your breakfast, you can do whatever. All right, you have your exit, you have your stop. You don't need trade management, you don't need break even, you don't need partials. You let it run, unless you have red folders. In that case, obviously, you need some active management, perhaps closing the trade 1 minute before the red folder. So if the red folder is at 9:30 a.m., I will be closing the setup manually at 9:29, wherever it is. I don't care if that's a win or a loss, I don't care, I close it. That's the only management that you can have. It's the only thing that can make you to close the setup or take volume from the table before price actually hits exit or a stop. With that being said, remember that on the description of the video you have my Instagram. You can talk to my DMs, ask for information about the private group so you can enter on the mentorship. You have my intensive course about this exact same strategy with all the ins and outs and deep explanation about everything. And also from Monday to Friday, live analysis sessions on the London Open and New York Open, doing live analysis on Eurusd and Bitcoin with this exact same concepts, live with live market conditions. With this being said, family, see you all tomorrow on the next video. Let's get it.